Greetings and good day. I hope you're doing great. I'm here with you for the daily analysis of the USDJPY currency pair on May 15th. After seeing signs of intervention by the Bank of Japan to support the yen over the past 2 weeks, the price of this currency pair dropped and filled the weekly FPG zone. After that, this week we've witnessed an increase in the...
Do you know why your profits are smaller than your losses? Because you don't analyze your trades, you just execute them. Download the Trading Journal app for MetaTrader 4 and 5 for free now.
Strength of the US dollar, such that from the beginning of the week until now, the price has experienced more than a 1.23% rise. We're on the last trading day of this week, and as you can see on the daily time frame, the price of this currency pair has consistently formed bullish candles since the start of the week. This currency pair even experienced a sharp drop of nearly 100 pips on Tuesday, but almost immediately recovered more than half of that decline. And afterwards, the Japanese Ministry of Finance remained silent regarding the possibility of currency intervention. We are now reviewing the economic calendar. As you can see, this week we had important CPI and PPI reports for the US dollar, and both of these reports were released with figures better than the forecasts, which, along with other factors, greatly contributed to the strengthening of the dollar. Today as well, we won't have any significant economic data, and by reviewing the currency strength chart, we can see that over the past week, the US dollar has consistently been stronger than the yen. On the daily time frame as well, we can observe that the US dollar remains the strongest currency in the market and is being traded with more strength compared to the Japanese yen. We are now reviewing the 4-hour time frame. Here we can see that after the heavy drop we witnessed at the end of last month, the price reacted to the 4-hour order block area, and at this point, we saw the price of this currency pair rise. After we saw the price rise up to the 4-hour unicorn area, on Wednesday, another heavy drop occurred in the price of this currency pair, and the EUR/USD pair recorded its lowest monthly level in the 155 yen range. Again, after the price reached this support area, with the increased strength we saw in the dollar, this upward movement began. We are currently analyzing the 1-hour time frame. Given the movement at the start of the day, we will consider the daily sentiment for this currency pair as positive and bullish. As long as we don't see any news contradicting this outlook, moving forward, whenever the price enters a short-term correction after setting a new high, we can look for opportunities to enter buy positions using various strategies on lower time frames. For these positions, we can consider targets such as the previous high or higher BPR zones. However, given the highly volatile movements this currency pair has experienced in recent days, there is still a high chance of sharp and sudden price swings, which could trigger stop losses. Wishing you success and profitable trades.
7 powerful volume trading indicators: footprint, volume profile, and fast scalp. Level up your trading.